Now, before we kick off on the China episode and Asian episode, we just had a recent test, so we will be able to go live soon. So you won't have to wait as long if you want to hear me rant about things. But if you want to see it prettier, you can wait a little bit longer, but at least we'll be able to get this out a little bit faster to our adoring fans, obviously. So if you, again, please like, share, subscribe. Your support is appreciated. So when we start going through what's happening in China right now, we really have to talk about what is really going on when you look at the underlying commodities, because commodities have been swinging all over the place depending on what is coming out of China, what is coming out of the government, how are they talking. So here's just a look at thermal coal. You can see the massive collapse that came from pricing, obviously still high for 2021, but you can see how things have really pared back. And, we talked about it on the EIA show, but now they're talking about rationing gasoline and diesel. They're talking about different ways to mitigate against pricing when you look at thermal coal. So we've seen this play out in everything from coking coal, thermal, to iron ore, to tin, to copper. I mean, these things are just dancing in all types of ways as the government keeps talking about price controls and letting some prices go through and trying to manage the different levels, just because and we'll talk about this in a minute, the CPI versus PPI is just insane when you look at just the deviation between the two, which is why we continue to see a significant amount of problems on the margin, on companies in general. So this is going to be a key point to watch to see how they can adjust this, and they're going to need more volume. So as we talked about last week, there were 72 mines that were down due to flooding. They've now been back for a little bit under a week, at least the last one. It comes on in different waves, and they're finding ways to try to mitigate some of this, especially on the coal side. But before we get into this, we also want to talk about Myanmar or Burma, depending on how you remember the name. And one of the biggest issues right now is that the military is actually amassing troops, and this is the similar thing that happened when there were atrocities a few years ago. And this is going to be something to watch, just because a lot of tin comes from Myanmar and flows into China. And there's going to be, if you look at substrates, tin, and some of the other issues, especially as we go into the electrical world, that is part of the shortfalls. So this is going to be something important to pay attention to. And when you look at what came out today, I should say yesterday, so Premier Lee did what he always likes to do during the weekly state council executive meeting. But the biggest focus has been tax deferrals. And as we've been saying, tax deferrals for small business were going to be very likely. And that was confirmed again. Easing the business environment for small and medium-sized enterprises is one of Lee's all-time favorite topics. At the meeting, he decided, Lee and company decided to implement a phased tax deferment program for SMEs, or the medium or small, medium-sized enterprises, related to enterprise income taxes, domestic VAT tax, domestic consumption tax, urban construction, and maintenance tax. Again, all ways to just take away some of the underlying cost, underlying pain that some of these companies have been facing. Because remember, these are the ones that are seeing some of the biggest issues versus some of the others, being the mega caps and the large caps. And then they got very specific to different pieces. So taxes will be deferred for 3 months. Enterprises with annual sales revenue of less than 20 million renminbi will receive a full deferral. Enterprises with annual sales revenue of renminbi 20 to 40 million will receive a 50% deferral. And he also did some other numbers. So expected deferrals for manufacturing SMEs will reach about 200 billion renminbi. Expected deferrals for power and heating supply enterprises will reach about 17 billion renminbi. I'm sorry, expected deferrals for manufacturing SMEs will be 200 billion renminbi. Expected, so the deferrals will be implemented on November 1st. So though Lee is a perpetual crusader for helping the little guy, these measures are decidedly short-term focused. So again, it's just kind of that shot in the arm that we've been talking about. Because one of the things that we've discussed is the triple R cut. Like, are they going to do a triple R cut? Are they going to do something else? So our view was that they were going to do one that was going to be targeted at the small and medium companies, or micro, small, medium companies. This is something that could happen in lieu of that. So you don't have to do the triple R if you're doing something like this. And they started increasing some liquidity, and we'll talk about the liquidity that's been injected, which is also another way of doing it just a bit broader. So this will be more targeted, and the liquidity that's been injected from the PBOC is a bit of a broader move. So again, working these hand in hand, you then mitigate against the need of that reserve ratio cut. So tax relief for small companies will keep employees on the payroll amidst the ongoing economic recovery. With China's energy crunch likely to continue, lending a fiscal hand is kind of the focus at this point. Now, one of the things that we wanted to look at is how much coal consumption has risen since 2000. And in 2000, the percentage of share of coal consumption by country and region. So in China, it was 29%. Now China in 2020 was 56%. India has moved up to 11%. The US is down to 6%. The EU down to 4%, and the rest of the world is 19%. So as you can see, China and India are very large consumers of coal, which is why it is such a big piece of the underlying pie, with the ASEAN countries or that Southeast Asian nations going from 1% to 5%. So Asia is a huge component, which is why we're talking about coal so much, because this is where we import a lot of our goods. So if coal prices are going up, if electricity prices are going up, guess what your goods are going to do that you're buying in your local store? Yes, you guessed it, they're going up. So then when you look at some of the liquidity metrics, so this is the Longview liquidity indicator for China. So here's where you can see that sharp contraction in credit growth. And again, that they're starting to level off. It's not going down anymore, but it's not going up either. So that's where we expect to see this continue to go down. Again, we've put this against base metals, we put this against oil, coal, you name it, we've put it against it. And this is just showing you where economic growth is going, how it is slowing, and what that's going to do to the underlying economy. So this is what we wanted to talk about quickly, where the payable gap has ballooned further since 2019. And it's because of that divide between what we're seeing on PPI and CPI. So a rising payables gap means larger listed firms are draining more liquidity from smaller unlisted suppliers. So when you look at what is happening, they're essentially just not paying the smaller guy. So if you are, if you're a large company, you have the ability to where you can pay your bills, and typically there's a 90-day, 30, 60, 90-day receivable. And what is the smaller guy going to do? If you're, as a large entity, you might be the biggest part of his portfolio. You have a lot of say in movements, and that has continued to increase, which is essentially a free loan from the smaller individual. But if they don't have that money, they may not be able to go out and purchase new raw materials until they get their cash flow. They might have an issue with paying employees on time. So this is something that has also continued to expand. But when you look at the issues at the top side, when you look at the difference between CPI and PPI, that PPI side is the biggest issue because the producer price index is going up. So if you're not getting paid on time, you're not really passing through the consumer. So you're relying on that company to pay you so you can go out and get your goods. Again, just creating more strife, more difficulty within the underlying system. Now, with thinking about coal and this, and as well as where we are on credit impulses, it's important to also think about the agreements that have been happening with the ASEAN. So when we're looking at the ASEAN to upgrade its relationship with China and propose some perks, because again, China also needs an uplift to their economy. So their goal is to expand trade and economic integration, speed up negotiations around points of friction in the South China Sea, and throwing a summit to be attended by Xi himself. So Li doubled down on Wednesday. So wider cooperation on public health, such as 20 million renminbi for medical supply reserve, fast-tracking movements of goods within the region, building digital infrastructure and cooperating on cyber governance, promoting sustainable development through capacity building and tech transfer. China wants to tie the knot with its nearest neighbors before the U.S. can regain a diplomatic foothold in the region, which I would argue is a bit late. And this isn't just geopolitical maneuvering, cooperating on a regional trade relationship, public health, and resilience to climate change reduces risks, boosts integration, delivers direct benefits to China. Remember, China needs to grow. They need some sort of boost. This is some low-hanging fruit. So then when you look at some of the disconnects, so the official profits versus the industrial production year over year, so you get an idea of where this is going to continue to go. Industrial profits versus the PPI, CPI gap, ex food, which is what we've been talking about, is now firmly negative and falling further negative, which again is just showing where profits are going and why there's going to be continuous pressure on the underlying economy. And then when you look at, one of the things that we've talked about is just the amount of stimulus that came through, and it was aggressive, but then there was a hard pare back, and it really fell as the pandemic spread and it started to impact others. So you had a quick rebound, but now you've really leveled off, and this is the trajectory that we've been expecting of this leveling off to slowing down, because China, the net trajectory has adjusted. And it's going to be difficult to change that. You have two facilities. There's a chance that Evergrande could default on something different now over the next few days. And we did have another default, which again created more strife within the system. So you're seeing rolling defaults that are continuing to happen, especially on the developer side. And then we just showed industrial profits are falling. All of these issues continue, which is why that trend is likely to continue to move down and be under pressure. And then when you look at China imports to the U.S. and low-skilled U.S. real wages, this is what we were discussing before in segments 2 and 3, that wages have gotten better in the U.S. as imports from China have gone down, because you need to replicate this. You still need the goods because it may be a widget that goes into the end product. So this is something that we have to really pay attention to is this going to be a way to help bolster employment, especially on the lower end, instead of relying so much on China? And the short answer is yes. But then when you think about what are things that the PBOC is doing, they've had some net injections from the reverse repos. And when the reverse repos, what new are you putting in and what are you letting expire? And they have pumped in about 120 billion essentially per day over the last 2 days. Again, not a huge amount, but enough to keep things moving, but also it's month end. And they typically put a additional liquidity in the market into month end. So we're going to want to see, how does November, are they taking it back out? So the first week of November is going to be a good kind of test to see how much stays in the system. And now when we start looking at India, because things are obviously very important, especially when we start turning to the ASEAN countries. India's price trends mask persistently high core inflation, and that's where we look at the inflation continues to go up, which is why the RBI has done less, but they can't stop, because there's still a problem, there's still a slowdown, but they really can't do a lot of QE because of these issues that sit there. And private consumption weakness in India persists. It's getting better. You can see it's starting to swing up, and it continued to get better in Q3. But you get an idea of just how low it is from that normal trend and where those issues are going to persist over the next few months. So then when you think about what the issues that are happening in China that are constant, and then in India, well, let's look at the SOE. So SOE, the state-owned enterprise defaults decreased thanks to more local government support, because local governments came out and said, we can't let these guys continue to default. We're going to have an issue on employment. We're going to have an issue on taxes. So you did see some of this backdrops, which is why we did get a steady fall in SOE bankruptcies. But local government also got support from the PBOC, as we talked about last year and the beginning of this year. They left some of these avenues open to bring cash in quickly, which again allowed them to backstop some of these additional losses. Now, when you think about the investment that has been happening, China, even though there's all these issues that we've talked about, they're still investing, and they're invested. China integrated circuits output, you can see, is at an all-time high. So when you look at what they're actually creating, they're still creating as much as they possibly can when you look at the China integrated, and China is the biggest buyer of chip equipment, because again, they want to become that powerhouse for the tech side, for AI, for all of these key components, which will be a leader and a driver of future growth outside of obviously where we are on the retail real estate side. But when you look at what changes have happened on the household and medium and long-term loans, so household, medium, and long-term loans have fallen through a floor. They are steeply negative, and that's going to drive down home sales. On the other side, China bank lending to developers as a percentage of GDP is negative 0.8%. So when you look at just where this is going on both sides, you have the households that are not borrowing as much, and now you have the developers coming down. Again, all of this is just leading to less growth and more pressure on the underlying. And then when you look at the authorities want to keep debt under control, the biggest one that they've been trying to look at is how to really not only just cap it, but start to pull it back down. And you're seeing that on the bank loans, it's essentially flatline, but on the private sector credit, you've seen a very small, steady though, a small reduction, which has brought down total credit, including some of the underlying. So then when you look at Japan and kind of start to piece this together, as we said, we thought Japan was going to get a bit better. It did. When you look at CPI, came in about 2.2%. Machine tool orders, supermarket has gotten better. PMI manufacturing is at 53. Services bounced to growth at 50.7, putting the composite at 50.7. And as we said over the last few weeks, we expected it to be just above 50. So this is a little bit better, but when we were saying just above 50, we were thinking 50.3, 50.5. So a little bit better than expectations, which obviously is a net positive as some of the leading indicators continue to show growth, and we expect this to be a stronger driver. South Korea had a slightly disappointing GDP. The expectation was for 4.3, came in at 4%. Quarter over quarter was expected at 0.6, came in at 0.3, but consumer confidence is up to 106.8. So again, you're still on an upward swing, and we should see that continue as exports remained robust for the first 20 days of October. Now, when you start looking at QE, this is some of the traps that we've seen where QE has been trapped at banks. And all you have to do is look at the RRP that I post whenever I can on Twitter, just looking at the amount of capital that is going between the bank and the Fed and the bank. It's the same thing. Reserves held at central banks, currency in circulation. You get an idea of you're just moving cash back and forth, but it's not actually disseminating to the individuals that need it. And that's why it is called the Japanese liquidity trap, which is something that we've seen so far, which is why when we talk about the velocity of money, how if you keep pumping money into the system and you have no growth, well, obviously that number is going to go down because you're juicing the denominator as the numerator gets worse. So clearly you're not going to have any real growth, which is where we've seen this here. And then this is just looking at South Korean exports continuing to drive higher. Again, seeing some of this growth that will be in the backdrop. And this is just showing where we sit on Japan composite, just above growth, starting to come out of the slumber. But we don't see too much. Manufacturing we think will stay elevated, and that's above 50. Services is the one that's going to struggle a bit, that we think it'll be in expansionary territory, but just below that expansionary level. Just above 50, but below 51. So kind of that margin of error where maybe it's flattish and it's just not seeing a true movement on the services side, just because, again, the local consumer continues to struggle a bit. And now we'll continue to update you on new and changing defaults. So Evergrande is obviously going to be one to watch. They have a one coming due this, I think it's this Friday or this weekend. So it'll be, we need to see them come through. I know that there's been some assets pledged by executives to help bridge the gap. But again, there was another default again, modern land. So that's not overly surprising, and we're going to continue to see those defaults roll through. And then the question is, what happens with the assets? What happens to the shareholders and obviously the consumers that gave money to them in exchange as what we would consider a REIT in the States? So if you have any questions, please let us know. We always love to hear from you. You can find me on Twitter. You can find me in the comment section. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.